Phone contract complaints escalate. Mobile phone customers are being hit with huge exit fees, even if they have legitimate complaints about poor reception or bad service, according to research published by a British charity that gives free advice on consumer finance. Citizens Advice, or CA, says its study suggests that problems faced by customers haven't improved in recent years, despite government promises to intervene. Almost 20% of problems reported to the charity were related to poor service and contract exit fees. CA found that customers were not being allowed to end their contracts early without penalty, even when suppliers failed to deliver on their promises. For instance, where a 3G or 4G service was paid for but wasn't actually received, with some companies refusing to specify what constituted a reasonable minimum service. With more and more people seeing a mobile phone as an essential rather than a luxury item, and handsets becoming increasingly sophisticated and commensurately expensive, consumers are often committing to contracts of up to 2 years without fully understanding what their rights are. The report showed that there was also confusion over who was responsible when problems arose. 39% of complaints argue that manufacturers, network providers and retailers often pass the buck between themselves to avoid having to resolve the issue. The UK government had promised to introduce a cap on mobile phone bills run up by thieves, following complaints by consumers about the extent of their liability for calls made after their phones were stolen. This was sparked by a spate of thefts in European cities in which phones were stolen not for resale, but to rack up thousands of pounds worth of calls to bogus premium rate lines. The government cap of £50 for fraudulent calls was set to be introduced in late 2013, but despite a growing number of complaints, is still not in place.